FFP Wealth Management has been helping people in every aspect of their personal wealth, accumulating, distributing, transferring, and now we're really focused on inheriting wisely. And much of what we've learned about inheriting and leaving is often maybe miscommunicated, misunderstood, we're not sure. But I know for a fact that the estate planning industry focuses enormously on the estate tax, and one of the big issues is to make sure people are doing tax-free gift giving. Essentially, everybody in America can give $13,000 a year to any American citizen tax-free. You've probably heard of that. And a couple can give $26,000 tax-free to a single person in a split gift. But let's just say hypothetically, somebody needs $126,000 and you're willing to give it. The question is not, is it a good idea or a bad idea? You're giving the money. It's $126,000. As you write the check and you hand it over, what question must be going through your mind about the taxable $100,000 portion? How about what's the tax, right? Everybody wants to know. Well, I've been in business over 21 years and nobody has ever asked me the question. So, if you were to ask me the question right now, what's the tax? I'm going to tell you. You might want to grab a pen. It's 0. There's no tax. Now, you must be wondering, what's all the fuss about? Let me tell you exactly how this works. Because we're talking about tax-free gifts. We're not talking about income tax. We're dealing in the estate tax world. What I have in my hand right here is a Form 709. The Form 709 is the form upon which gifts must be reported. The Form 709 has who's the gift giver or givers, who's the recipient, what's the amount, in this case $126,000. What's the tax-free part? $26,000. What's the taxable part? $100,000. And then the question is on here to say, that asks, have you given away more than $1 million of taxable gifts so far? If the answer is no, no tax is due. Now, you must be wondering, what's all the fuss about all this tax-free gift and gift giving? Well, there is a concern because the IRS now has this, right? And you know, we've talked about it before. They've got the smartest people on earth working for the IRS. They're sitting around waiting for you to die, because then they're going to get you, right? That's the idea. Well, what I have here is the Form 706. That's the form that's filed for a taxable estate when somebody dies. What's your estate worth? What are your expenses of your estate? Subtract that. What is the charitable giving? Subtract that. What was the cost of dying? Subtract that. And then add all of the taxable gifts. For the portion under current law, for an individual, for the portion above $5 million, the tax is 35%. For a married couple, the tax for the portion above $10 million, the tax is 35%. In other words, if you're worth less than $10 million as a couple, $5 million as an individual when you die, there is no tax. So we tend to spend an enormous amount of time talking about something that almost nobody will be having to deal with. So if you want to make gifts, you still report them. You still want to make sure it works in your plan, but don't make decisions regarding leaving assets or inheriting assets based on what you've heard or what other people have done. Find out what's right for you. And we'll be talking about this and other topics at our upcoming workshop, Leave Wisely, Inherit Wisely. At that seminar, we're going to be covering many topics to help make sure you and your family keep more of your money that you've set aside for yourselves. We'll see you there.